Everyone says buy leaps on growth stocks. Deep in the money, let time work for you. But does it actually work? I backtested buying leap calls on 5 different stocks over 3 years. One of them made $126,000, another barely made $10,000, and the delta that works best? It depends on the stock. Let me show you. If you're new here, LEAP stands for Long-Term Equity Anticipation Securities, basically options that expire more than a year out. The idea is simple. Instead of buying 100 shares, you buy one deep-in-the-money call option. You get similar upside with less capital. Today I'm testing 3 different deltas. 0.70 delta, slightly in the money, 0.80 delta, moderately in the money, 0.90 delta, deep in the money, almost like owning shares. I ran this on TSLA, NVDA, AAPL, QQQ, and SPY from 2020 to 2023. Let's see what happened. Here's how the backtest worked. Entry. Buy a leap call with at least 365 days to expiration. Target the delta we're testing. Monthly entries when we have no position. Exit conditions. 50% profit target. Take the win. 50% stop loss. Cut the loss. Roll at 90 DTE. Don't let theta crush us. Simple rules. Now let's look at the results. Let's start with the big winner, Tesla. 0.70 delta, made money but not impressive. 0.80 delta, better, but still not the best. 0.90 delta, $126,097 profit. 77.8% win rate. Tesla's volatility and massive run-up meant the deep ITM calls captured most of the upside while limiting downside. The 0.90 delta leaps on Tesla absolutely crushed it. NVIDIA was interesting. Different story. Here, 0.70 delta actually won with $28,525 and a 3.38 profit factor. The lower delta gave us more leverage on NVIDIA's moves, and the stock was volatile enough to hit our profit targets faster. Apple, the steady grower. 0.90 delta won again, $19,061 profit with an 85.7% win rate. That's the highest win rate of any test. Apple's steady appreciation meant deep ITM calls just kept winning. Profit factor of 6.66, for every dollar lost, we made almost $7. Now let's look at the indices. QQQ, the tech ETF. 0.90 delta won with $14,649 and 66.7% win rate. SPY, the S&P 500. 0.70 delta won with $10,569 and 75% win rate. Interesting split. QQQ acts more like a growth stock. SPY is steadier and benefits from the extra leverage of lower delta. Here's what I learned. For growth stocks like Tesla, Apple, and QQQ, use 0.90 delta. These stocks trend hard. You want to capture as much of that move as possible. Deep ITM means less theta decay eating your profits. For indices and steadier stocks like SPY and NVDA, 0.70 delta can work. More leverage, faster profit targets, but more risk. The key insight: match your delta to the stock's behavior. Let's put it all together. TSLA, 0.90 delta, $126,000, 77.8% win rate. NVDA, 0.70 delta, $28,500, 77.8% win rate. AAPL, 0.90 delta, $19,000, 85.7% win rate. QQQ, 0.90 delta, $14,600, 66.7% win rate. SPY, 0.70 delta, $10,500, 75% win rate. Total profit across all 5 backtests, nearly $200,000, all with simple entry and exit rules. And this is backtesting. Real trading has slippage, emotions, and bad timing. But the data is clear. Buying leap calls can work, especially on growth stocks with deep in-the-money deltas. If you want to see more backtests like this, hit subscribe. Next video, I'm testing whether you should trade options during earnings season. See you in the next one.